Hello, welcome to the 700 Club. The Federal Reserve is warning that America's economic problems might be worse than they thought, and financial markets around the world are still falling because of fears of a recession. Meanwhile, Washington is still looking for financial help for the struggling auto industry. Here's reporter John Jessup.
The Fed's sobering assessment of the economy had an immediate impact on the markets. For the first time in more than 5 years, the Dow started the day below 8,000 after Wednesday's dramatic 400-point drop. The slide rippled through Europe and Asia, where oil prices fell below $53 a barrel, almost at a 2-year low.
The message of the minute from the Fed today really hit the market like a slap in the face. They stopped short of using the word recession, but they certainly didn't stop short of describing a recession.
The Federal Reserve warned that the country's economic hardships will continue well into next year, suggesting that more interest rate cuts may be needed as unemployment will likely rise. The negative forecast came as the path to bail out the big three automakers appeared to have hit a dead end here in Washington. Congress sent Detroit back home without the $25 billion loan they asked for. But lawmakers from auto states are working on an alternative plan to keep the companies running on enough cash to get them into next year.
Many people saying that we created these problems ourselves and, it's just a Michigan problem. But it really isn't just a Michigan problem. It will resonate in a very negative way throughout our entire national economy.
Meanwhile, industry workers are left to wonder about the future.
I got a house payment, I got kids, I got stuff I got to take care of. You take away this, where am I going to go?
If I lose my job, the restaurant down the street is not going to have a customer. Or the gas station. You know what I mean? It's a circle, and everyone needs to see that. This is a big circle.
And the economy may face another concern on the horizon, deflation. Last month, consumer prices fell the most in 60 years, following a record drop in wholesale prices. It's a major concern for the markets, with the Dow already down nearly 40% this year. John Jessup, CBN News, Washington.
Terry, it is grimmer than it should be. This is the headline of the Wall Street Journal for this morning. Give me a close-up on that. Stocks bond tumble to new crisis lows. This looks like something you'd see during the Depression. It was this kind of a thing. And not only the stocks are falling, what's happening is it's a cascade, because I think the banks and the brokerage companies are trying to put these hedge funds out of business. And so there are a tremendous number of margin calls, which means people are dumping stocks. So it gets to be a self-feeding frenzy. And in my opinion, the banks are doing nothing. Nothing to help.
Why isn't there pressure, since Washington has saved many of them, why isn't there pressure for them to move?
This TARP was the most ill-considered thing. They did not think of the consequences. They just dumped several $100 billion into the banks. The banks are saying, thank you very much. We're now going to fill our coffers and sit here fat and happy and watch everybody else suffer.
But that's why people feel so anxious, I think. You can tell there's no concerted joint effort.
Well, it's mismanagement.
It's hodgepodge.
Katrina Redux.
Yeah.
And folks, this is. But for the members of the Federal Reserve to come out and say, "Well, listen, this really is bad." I mean, keep their mouths shut. I mean, why say things like this? Make your policy moves, but don't go on, making speeches to whichever group it was that they were talking to, making speeches and saying, well, things are going to be much worse. Deflation, 1% consumer price index, the lowest level in decades, and we understand that the unemployment claims have gone up to the highest level since, I believe it was 1992. But the government really is just backfilling, and yet the banks they're turning the screws on people. The investors, anybody with a margin, they're turning the screws, which means more and more stocks getting dumped on the market, and the stock market's in a free fall. There's got to be some place down there where these good stocks that are being trashed catch hold. Interesting enough, gold was up, oil was down, all's trading towards $50 a barrel, which in a sense is good for the consumer, and so is lower prices good for the consumer. But apparently deflation is not the best thing in the world.
I don't think people have confidence in what's happening at the moment, those who are at the helm. Is there someone at the helm, I guess is the question.
If I were, I wouldn't have any confidence. I mean, it's total mismanagement. And, but the thing was so bad, and it was set up from human greed. These guys were so greedy, and the householders were so greedy, and the mortgage lenders were so greedy, and everybody wanted a piece of the pie, and they've stuck us in this ungodly mess, and nobody seems to have addressed the problem and doesn't quite know what to do about it. And I, in a sense, can't blame them. How do you get out of a situation like this? But, you know, it's... Well, hold on to your hat, ladies and gentlemen. The ride's still going down, and the old idea of catching a falling knife, don't quite grab it yet, you get yourself cut. This thing has got to stop. They're trashing companies that are very, very good. They're selling off high-yielding stocks. They're doing things that makes no sense, and there will be some incredible bargains somewhere along the way. But I would think the last couple of days would have set a floor, but it doesn't look like it.